earnings conference call. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during this conference call, please signal an operator by pressing star then zero on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Amit Sanghvi, Managing Director, Shaily Engineering Plastics Limited. Thank you, and over to you, sir.
Thank you very much. Good morning and a very warm welcome to all the participants to the post-Q4 FY25 results investor call of Shaily Engineering Plastics. I have with me Mr. Sanjay Shah, our Chief Strategy Officer, and SGA, our Investor Relations Advisors. I hope you've had a look at our investor presentation that is uploaded on our website as well as the stock exchange. Let me start by giving some highlights on the operational performance as well as the business highlights. In FY25, the company delivered a strong revenue growth of 22% to 787 crores, with EBITDA margins expanding by 350 basis points to 22.7%. This is mainly due to increased sales from our healthcare segment, which grew by 53% on a year-on-year basis. Let me give you a short brief on overall business updates for the quarter as well as for the year gone by. Starting with the healthcare segment, we signed 2 new customers for our IP-led pen platforms during the quarter. In FY26, we will start commercial supplies of pens for GLP-1 drug semaglutide. We are seeing growth for our IP-led pen platforms going forward. We are in discussions with customers regarding volume commitments or capacity commitments next 3 to 5 years, and we would be aligning these commitments with our manufacturing capacities. We're expanding our pen manufacturing capacity to add another 40 to 50 million pens per year across primarily 2 platforms, both for servicing the growing demand of GLP-1s. The effect of this expansion during the last year, 8 contracts with different customers for pen injectors or auto injectors, primarily for GLP-1, but also for some other therapies. We participated in PharmaPack in Paris to showcase our innovation in the medical space, and we've also participated in other global exhibitions across the US and Europe to increase our presence in regulated markets. In FY25, our revenues from healthcare sector year-on-year basis to 165 crores, 21. We anticipate that our medical device business will comprise about 30% of our revenues over the next few years, enhancing value and profitability. Our focus is in line with expanding our horizons to include contract manufacturing for medical devices, products featuring our intellectual property, and some specialty applications. Within this industry, we remain committed to continuous growth and innovation. At this point, I want to address concerns and questions that we've been receiving from the market regarding the impact of oral GLP-1s on. So, it has always been known and also cited in various historic reports that orals would certainly play a role in GLP-1, but would likely be limited to a market share of somewhere around 20%. Orforglipron is not new. There has been published reports of various stages of development and trials since 2018, I believe. Also, the data that is submitted based on publications of their show a weight loss of 77% in diabetic patients, and they project a 13 to 15% weight loss in obesity trials. This is still lower than data for Wegovy and significantly lower than data for Mounjaro or Zepbound. Now, I'm no expert, but what I've learned from other experts in the domain is that orals have a lower efficacy primarily because of the bioavailability of the molecule. For example, oral semaglutide has less than 2% bioavailability versus 80 to 85% for the injectable. Also, one of the reasons why you see a much higher API content in the oral products. It is also to note that there are currently between 55 and 60 GLP-1s under various stages of development. Even out of these 55 to 60, we see that 75 to 80% are in injectable form and 20 to 25% in oral form. Therefore, just to summarize, orals will certainly play a role in this growing market. However, we believe that areas 80%, with the rest going to injectables. Coming to the consumer segment, we've added 2 new products in plastics and 3 new products in carbon steel, a home furnishings customer in Q4FY25. We've also received new business from a marquee FMCG customer for 2 new products during the last quarter. Over FY25, we received new business from 2 global retail chains for which supplies have started in this quarter. We did also receive business for 2 new products from a marquee FMCG customer and been awarded which are under development during last year. We've seen an improvement in our carbon steel business for the year. Revenues from this segment grew by 17% on a year-on-year basis to 561 crores in FY25. I apologize. I think there's a... That's pertaining to the consumer segment. Lastly, coming to the industrial segment, we've received new business from marquee customers for automotive components in Q4FY25. Over the year, we have confirmed business for supply of knobs for exports and been awarded business for automotive components. In FY25, revenues grew by 12% to 61 crores, and we expect steady growth in this segment. We have recorded the highest ever revenues and profitability in FY25. This has been on the back of improved traction seen across segments and ramp-up in projects. Visibility we have across various businesses gives us immense confidence that we'll be able to scale up further and grow. Last topic from me before I hand over to Sanjay. I just wanted to provide us a short update on our development pipeline, something that I've mentioned in the past. For the emergency use auto-injector, our program is progressing well. We plan to complete development and supply clinical batches in Q4 of current FY. For the last 12 months, we've been working on the next generation of GLP-1 devices. The foundation of this development comes from having conducted user studies and seen over hundreds of hours of videos to understand how patients behave at large. We now developed a device that will be non-priming, fixed dose, activated by a pull and push mechanism instead of dialing, along which results in which is simple, accurate, and intuitive. With this device, we intend to target global large businesses. Our last development pipeline on the soft mist inhaler, we have reached the stage of getting one of our concepts cleared for intellectual property and will now be moving forward with the full development program. That is all from my side. I shall now hand over the call to Mr. Sanjay Shah to give you the operating and financial highlights. Thank you very much.
Thank you, Amit. Performance of Q4 and FY25, following which we will be happy to respond to your queries. During Q4 FY25, we processed 6,536 tons of polymers as against 5,380 tons in Q4 FY24. For FY25, we processed 24,932 tons of polymers as against 22,098 tons in FY24. Machine utilization rate was around 44% in Q4 FY25 and 40% in FY25. We expect this to increase in the coming years, and we expect to increase utilization levels over the next 2 to 3 years. Exports during Q4 FY25 and FY25 stood at 80% and 78% respectively of total revenue. I shall now brief you on consolidated for Q4 FY25. Revenue stood at 217.8 crores as compared to 170.6 crores, a growth of 28% year-on-year. EBITDA stood at 54.6 crores as compared to 36.3 crores, a growth of 51% year-on-year. EBITDA margin stood at 25.1%, an increase of 380 basis points over Q4 last year. PAT stood at 28.6 crores as compared to 19.3 crores, a growth of 48% year-on-year. PAT margin stood at 13.1%, an increase of 180 basis points over Q4 last year. Cash PAT stood at 39.7 crores as compared to 29.3 crores, a growth of 35% year-on-year. Now coming to FY25 consolidated highlights, revenue stood at 786.9 crores, 8 crores as compared to 643.9 crores during FY24, a growth of 22%. EBITDA stood at 178.4 crores as compared to 123.4 crores during FY24, a growth of 45%. EBITDA margin stood at 22.7%, an increase of 350 basis points over. PAT stood at 93.1 crores compared to 24, a growth of 53%. PAT margin stood at 11.8%, an increase of 290 basis points over last year. Cash PAT stood at 135.3 crores as compared to 93 crores during FY24, a growth of 45% year-on-year. Our ROC and ROE stood at 24.4% and 18.5% respectively as on 31st March 2025. This has been achieved with disciplined use of capital. Our debt to equity stands at 0.4x, while our long-term debt to equity stands at 0.07x as on 31st March 2025. Now coming to consolidated segmental revenue breakup for FY25. In consumer segment, revenue stood at 560.8 crores as compared to 481.2 crores during FY24, a growth of 17%. In pharma segment, revenue stood at 164.7 crores as compared to 107.7 crores during FY24, a growth of 53%. In industrial segment, revenue stood at 61.4 crores as compared to 55 crores during FY24, a growth of 12%. That is all from our side. Now we can open the floor for Q&A. Thank you.
Thank you. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and one on their touch-tone phone. If you wish to remove yourself from the question queue, you may press star and two. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Aman from Astute Investment Management. Please go ahead.
Yeah, good morning, sir. Congrats on the set of numbers. Couple of questions from my side. First is, sir, in the presentation you have mentioned 2 new customers for IP-led platforms. So could you talk about which these platforms are?
Yeah. So we got one for Neo and one for Toby.
Sure. And so we were expecting some commercial launches for teriparatide. So any timelines for the same? Do we expect someone in Q1 and Q2? And say for the full year, how many teriparatide launches do we expect in FY26?
We have received commercial orders for teriparatide, so we are going to produce and ship. Now, when it actually gets launched, I'm fingers crossed. Any time over the next 3 to 4 months, hopefully, maybe 5 months.
And for how many customers do we expect for FY26?
We expect 2 customers.
Okay, but I think we have a lot more customers than 2, right? So only 2 are expected to launch in this year?
Correct.
Sure. On the CapEx plan for FY26, you talked about 150 crore for pharma. So what will be the gross block after this CapEx? And is there any other CapEx for any other division for FY26?
Oman, the overall CapEx which we will end up doing will be about 185 crores. Predominantly, 150 crores is going into pharma for capacity expansion in terms of our beds and everything. So gross block will go up about 170 crores by the end of the year.
Sorry, Sanjay sir. What will be the gross block after the CapEx in pharma?
Pharma gross block will be probably somewhere in the region of about 350 to 375. Yeah.
Okay. And this will be enough for next 1-2 years, or do we expect similar CapEx in FY27 as well?
I think, Aman, it's a little early to tell because, everybody's dealing with what market will look like post-launch here. So let's just, I think, kind of wait. We are doing our expansions based on, largely based on committed volumes from customers. So, we don't want to do any expansions except a small percent kind of buffer, but where we don't have either committed forecast or volume or take-up base.
Sure, sir. That makes sense. Next question is, how many pens did we sell in FY25? And could you talk about our target for next 1-2 years?
I knew this question was going to come up, but I haven't had the exact answer. And unfortunately, my business development team is traveling at the moment. But I believe this year, I can tell you this year, we're looking at selling close to somewhere around 30 to 35 million pens this year.
For FY26?
Yes.
And say rough number.
Yeah.
Sorry, you are saying these are conservative estimates?
Take it at 30. Unfortunately, like I said, since 2 weeks, my business development team has been traveling. We haven't had a chance to catch up. But yeah, about 30 million is what I would assume that we're going to sell this year.
Yeah, but roughly for FY25 or for FY26 over FY25, you are almost talking about, say, 100% kind of number of devices growth. Roughly, I'm not talking about exactly.
Yeah, I was going to say that it will be around 70%. Yes, that's kind of what we're looking at.
But then, Aman, just to add to that, the growth is basically going to come, a large part of the growth is going to come from our own IP-led pen platform.
Yeah.
Sure, sir. And could you talk a little bit about, so you have given on the UK business, you talked about we are commercializing one project at least in Q4FY26. But in terms of growth, so this year was, and we are adding a lot of people in UK. So for FY26 and FY27, what kind of growth should we assume in our UK business?
What I would say is, when you take a look at our international business, take a look at numbers collectively from the UK as well as Shaily Innovations in UAE, because what you'll find is that combined there is going to be growth, but in the UK, likely that it'll be around a similar number as what we've done this year.
Okay, and if we take the combined numbers, sir, what kind of growth should we assume, say FY26 and 27?
So, Aman, I think getting into individual growth numbers, we would refrain from giving. If you've talked about it in the past, which you're aware of.
The history of it. There will be growth, but I think we want to refrain from giving individual UK growths, especially.
Sure, sir. Any other questions before I come back in queue? On the industrial side, sir, we have on a couple of projects, knobs and other things. While our growth was only around, I think, 12% in FY25. So given strong order book, can we expect maybe like 40-50% kind of growth and this segment crossing 100 crore contribution in FY26 itself?
Again, individual segment-wise growth, we would not want to talk about it, but yeah, we will see better growth as compared to FY26 in FY26 as compared to FY25. FY25 is when we commercialize two large projects for North, and you will see growth happening from those projects in the current year.
Sure, sir. Finally, on working capital side.
Sorry to interrupt, sir, but I may request
I'll
you
get
to
back
rejoin the question queue.
Okay, sure.
Thank you. Before we take the next question, we would like to remind participants to press star and 1 to ask a question. The next question is from the line of Harsh Shah from Dalal and Brocha. Please go ahead.
Yeah, thanks for the opportunity. Firstly, congratulations on a very strong set of numbers. I have a couple of questions. So firstly, as you mentioned that, say in FY26, we would, kind of selling around 30-35 odd million pens. And this, I'm assuming that this would also include insulin. If you could give a broad split between insulin and non-insulin, if that's possible.
So Harsh, what we have said is a large part of the growth in the current year is going to come from our IP-led pen platform, which is much higher, above 60% growth from non-insulin.
Okay. Got it. And if I say suppose have to dissect the non-insulin part, right? So basically that would be GLP. Is there any kind of a broad sense in terms of what would be the ratio broad between say the exhibit batches versus the commercial batches?
You want to dissect exhibit versus commercial?
Yeah.
You will see upwards of 70% being commercial.
70% commercial.
That's what you see also. You mentioned in the presentation which we put out also, okay, we're looking at making commercial supplies of semi in the current year. So,
correct.
And that will be what will contribute to the growth in the current year.
Got it. And on the capex part that you mentioned, right, say around 150 odd crores. So the capacity increase that you mentioned, correct me if I'm wrong, is it 40 to 50 million pens? The entire capacity will come on stream by end of FY26. Is it correct?
Not FY, calendar 26. So
calendar 26.
We are adding 40 to 50 million pens over the next 18 to 24. 18 to 20 months.
Got it. And also, one thing on the consumer segment. So, is there a case wherein, say, because of all the tariff issues that are going on, has there been any sort of inventory stocking or front loading from your clients in the consumer vertical for Q4? Because the growth that we are seeing of 27% on a YOY is significantly higher. So, some color on it, if you can give.
So Harsh, we have not been seeing inventory stocking or anything. What we have been seeing, the growth is basically we made revenue or sales to two customers, which we had back orders in Q3. We have started shipping to those customers. On the home furnishing customer, we have executed some projects which we were under execution or development that we have started shipping. So we have seen growth happening from that. On the tariff situation, I honestly feel it's still an evolving situation where even buyers are not clear in terms of how things will pan out. You see tariffs being changed every day. So, and negotiations happening every day. So probably you guys might have a better idea about it, and you can tell us what do you expect.
Very good. But have you faced any sort of disruption yet in Q1?
No, we have not seen any disruption. Orders have been going on at the same pace. There have not been any changes on anything.
Got it. And on the consumer electronics part, have we started any sort of, sample shipments or maybe, some sort of shipments have we done? And if possible, could you, highlight how big can this segment for us become in the next 2 to 3 years? If broad sense you could give on this.
So Harsh, on the consumer electronics, we have not made shipments. We have said as and when we do something, we will talk about it. I'll let Amit expand upon that.
We are engaged with a couple of customers. Beyond that, there's actually nothing to report.
Got it. And one last question. Yeah, sorry.
Harsh, I think. Yeah. Go ahead.
Yeah. So one last question before I get into the queue. So the gross margin improvement that we have seen in this quarter, is it a function of purely the product mix wherein, the healthcare has kind of scaled up, or has there been some element of, crude benefit that we have gotten?
Crude, no. I don't think there's benefit. There's no crude benefit.
So then, does this... Yeah. Sorry.
Mostly on account of scale up of healthcare and higher revenue. Better realization.
So does this mean, the EBITDA margins that we have posted for Q4 on a consolidated basis is around 25%, then should we consider this as the baseline margin in FY26, at least 25% for the full year?
I would don't look at it from a quarter-on-quarter perspective. Do we feel that if we execute the plan that we will have better margins? The short answer is yes. That's that's the ambition, and that's also what we think should happen. But don't consider it as a baseline and look at it from a quarter-on-quarter perspective. You'll see significant changes in this year when we report our numbers quarter-on-quarter.
So the way to look at Shaily would basically be you need to look at more in terms of a year-to-year. Year-to-year, you would see improvement in margins is the way we would put it out.
Yeah.
Got it. I'll get back in the queue. Thank you.
Thank you. Ladies and gentlemen, in order to ensure that the management is able to address questions from all participants in the conference, please limit your questions to 2 per participant. The next question is from the line of Anant Jain, HNI. Please go ahead.
Thanks for the opportunity and congratulations on a great set of numbers this year. A few questions here. I think you have clarified on the consumer side, but I personally feel that the kind of opportunity that we are seeing with.
Anand, we cannot hear you. Please speak up.
Can you hear me? Can you hear me now?
Yes.
Am I audible? Okay, great. So my first question is on the consumer electronics. Although you said that you report it when you have something to say, but what I personally feel is that there's a massive opportunity that is coming up because of these large international brands moving into India. Apple giving a very high guidance and also in the process looking to localize a lot of components. I know you can't speak on a customer-to-customer basis, but can we think of a very large capex from our side in next 1 or 2 years?
Short answer is yes. We if we can come to some sort of a conclusion on a business plan with the customers that we are speaking with, we will be looking at capex, and we will be looking at potentially at least medium to large capex in the next 2 years.
Thanks for that. Okay, I was looking for that. Thank you. The second question is more of an accounting question. We have seen significant working capital increase. Our inventory days have gone up from 1 month to 4 months. Can you just give some understanding there? That's the first question. And second question, if I see, is like the other current liabilities have gone up significantly from, let's say, 8-9 crores to 36 crores, I would guess. Is there an explanation for that as well?
So, Anand, on inventory, what we have done is there was a plant maintenance shutdown by one of our principal suppliers, and that a large quantity of material which we use. So he basically requested that if we can take on the next 3 months requirement. So that's something which we have done because we did not want to run out of material for the specific grade which was approved by the customer on the consumer business. So that's something where we have taken on inventory. The second part of the inventory is we have built up some inventory on the pharma part of the business, expecting scale up and everything. So you would, whether it's raw material or bought out, so we have basically built that up. So that's the second part due to which we have seen inventory build up. Increase in current liability would basically be in the normal course of business. So there could be some customer advances which would have come in or something. So it's confident.
Okay, so we have had higher advances from customers for, and that's being shown as other current liabilities. It's not like customers paid up for capex.
Sorry to interrupt, sir, but I may request you to rejoin the question queue.
Let's complete this question. It's a related one, so let's complete the question, please.
Yeah, thanks for this. So my question here is that, we would have also received advances from customers. Where does that show up in the accounting part? In terms of setting capex, not...
That's essentially what I'm saying. If there are advances from customers, it could show in other current liability.
Capex advances from customers, like setting up lines, dedicated lines for customers, even that shows up in other current liabilities?
So, either way, it goes to be a customer advance.
We don't make any capex advances. We take, if there would be, basically contractually speaking, the advance will be taken on a certain committed volume. So that's essentially it.
Okay, great. I have questions that, due to paucity of time, I'll join the queue.
Thank you.
Thank you. The next question is from the line of Nirali Gopani from Unique PMS. Please go ahead.
Yeah, hi. Thanks for the opportunity. Amit, in your opening comment...
Speak a little louder. Nirali, could you speak a little louder, please?
Yeah. Is this better now?
Yes.
Yeah. So, Amit, in your opening comments, you mentioned about the new generation pens that you are working on. So, if you can talk a bit more on that side, this is largely to cater a new set of customers on the pharma company side or better realization. How do you look at it?
So, we've been working on a strategy for last maybe 18, 20 months on how to look at attracting, innovator pharma, the originators. So, as when it comes to the originators, we looked at how do we engage with them, what would be the right approach. Of course, being present in the GLP-1 space, it's natural that we try to attack that space first. Having looked at a lot of data, research data, issues with existing devices, patient behavior, what we realized is that almost no one follows the IFU, which means that people aren't priming. Second is dialing a dose is always kind of on spring-driven pens. It's a little bit maybe easier, but if you look at just the obesity market and not the diabetes market, basically eliminating the folks that are used to using a pen injector, you find lots of errors when it comes to setting the right dose, delivering. So the overall efficacy of the therapy, may not be as high as intended. The third thing we also found is that most people eyeball the cartridge and the plunger position in the cartridge to determine when they should reorder or put in a request for reorder. So, these are fairly simple things. We thought we make the device intuitive, something which is sustainable. So, auto-injector is obviously very easy to use, but it's not sustainable given that you have to use a new one every week. So you go through 4 auto-injectors, 4 primary containers every month. So from that perspective, we decided that, we should develop a fixed dose device, which is simple, accurate, intuitive. So essentially came down to non-priming. We don't dial a dose. We just pull the button to activate and push the button to deliver. And with every push, you have a dose counter which shows you how many doses are left in the system. We could customize this device to deliver anything between 0.1 ml to 0.8 ml. But the intention is to target, large pharma, which is why we've developed that device.
Right. Perfect. And on this capex on the healthcare side of 150 crores, so does this number include the land part also? Because I guess we'll be needing new land also for this capex.
Whether we need land or not, I don't think we'll acquire land. So.
Okay. So will it be near our existing facility?
Really, this unknown at the moment, Nirali. This 150 crores which we are talking about is a large part of it is basically being put inside the current plan.
Okay. Perfect. And last question.
Sorry to interrupt, ma'am, but I may request you to rejoin the question queue.
Sure. Yeah.
Thank you.
Thank you.
The next question is from the line of Ritesh Shah from Investec. Please go ahead.
Yeah, hi. Thanks for the opportunity. Couple of questions. I just want to go back to the base. Basically, what is our current pen capacity right now? Is it 40 million pens? We had indicated 100 million pens. What is the timeline that we are looking at? And just for clarification, when we say incremental 150 crores, this is by when and what will be the eventual pen capacity that we are looking at? Is it like 100 to 200 or is it 100 to 150? If you could just give some bridge over that would be quite useful. Thanks.
So, we are adding 40 to 50 million over the next 18 months. The 150 crore capex is for the current year. Right? Now, after we add another 40 to 50 million, our total capacity would likely be in the range of 80 to 90 million. Beyond that, we would look at basically firm commitments or purchase orders to increase it further.
Okay, so this is something what we had indicated earlier as well, right? Going from 40 to 100 and 18 to 24 months. So there's nothing new over here, right? And I think the earlier capex indicated was 130 crores. Is it something that has moved up to 150? Is it the same number which has moved up?
Marginally, yes. I mean, I think when you say nothing new, maybe there's a little bit, maybe 5% capacity added since our last call. But otherwise, no, nothing significantly new. It was always planned. The plan is just solidified a little bit more.
Perfect. And out of this 150 crores, what part of advances have we already received or what part of capex has already been incurred?
Like I said, we're doing capacity investment based on firm commitments from customers. So, we'll always keep kind of maybe a 25 to 30% buffer, but otherwise it's all whatever we're doing in terms of capex would be committed.
And Ritesh, this will happen gradually over the next 18 to 24 months, so it will be happening over that period.
Sure. Second question would be if we had to go from say 100 to 150 or say 200, what is the sort of comfort on orders that we are looking for? Because the outlook seems pretty good. Is there any specific milestone that we are waiting for, given we understand the lead time for all this machinery platforms is actually pretty huge? Won't we be missing out on the opportunity if we don't go ahead with the capex right away, given the lead times which are there in place?
I don't think so. You have to understand that the product hasn't been launched yet by anyone. So everybody that's putting in capacities, talking about, I've heard everything from 100 million to 200 million to 500 million. I mean, there's obviously an opportunity, not saying that there isn't. But at some point, when you get into such large volumes of product, we have to be careful of how much capacity you set up. So we will set up capacity, and we've said this on calls as well as to customers, is that there is a baseline capacity that we offer when we do a program. Beyond that, we need firm commitments from customers to set up capacity. Now, The advantage with Shaily is that we are able to set up capacities in a much lower period of time versus our competitors. What gives us confidence is two things. Almost all of our customers have made fairly significant investments in setting up their own capacities. So customers setting up, right from someone setting up a 20 million cartridge and assembly line to someone setting up 150 million cartridge and assembly line. We see across our customers setting up their own capacities in-house, which is what gives us confidence that, we will be participating in that capacity as well.
Sure. If I may, just for clarification, when we say 40 to 90 million pens, what is the number of cavity molds that we are assuming over here? Because to my limited understanding, I think we had spoken about 4 to 8 to 16 cavity. And as it happens, basically on the same line, the production throughput can increase significantly. So how should we just connect both the dots?
So, I think from our perspective, again, product to product, it would differ. But the most economical output we find is somewhere where when you create a capacity of 25 million on a particular product, which is 16 cavity molds and an 80 parts per minute assembly line.
Sure. I'll join back with you. Thank you so much. All the very best.
Thanks.
Thank you. The next question is from the line of Rupesh from Intel Sense Capital. Please go ahead.
Hello, sir. Am I audible?
Hi.
Yeah. So my first question is, you said you expect 70% growth in the pens, and our own IP-led pens have higher realization. So is it fair to say that this 165 crore revenue we have done in pharma, there will be 100% kind of growth on the revenue side? Is anything wrong in this thinking?
Because we wouldn't want to put in a number there. But
commercial pricing is also different than clinical pricing. So, what we're saying is we anticipate 70% growth, and that's what we're sticking to.
Okay. And any guidance on the broader, company level, sir? You are saying you don't want to talk segment-wise, but maybe broader company, can we reach, let's say, 1,100, 1,200 crore revenue on the top line? Is that fair assumption?
No guidance on the company-wide. We have growth. We have good growth, I think, and it will be backed by stronger profitability. So, that's where we'd like to keep our guidance.
And just to add to what Amit said, we expect growth across all the three segments. It will be differential growth, but we expect growth across all the three segments.
Okay. And then my second question, sir, is can you give some color on, our presence at market formation in Canada and Brazil? And are we present with, let's say, more than one customer in both of these markets? And any regulatory approval which is pending on us on the device manufacturer?
We don't have any outstanding queries that we have to address, and we are present in both markets with at least 2 players.
Okay. And then, so just last one clarification. Applicator project, I think we had announced in one of the Q2 call, maybe 35 crore applicator project. So if you can give some color on that, how did that contribute in 25? And then what will happen to that project in FY26?
The applicator is going to probably get validated, I'd say in the first half of Q2, potentially end of Q2, and then we should see at least somewhere around 4 to 6 months of sales for the applicator in the current year.
Okay. Thank you for answering my questions. Yeah.
Mm-hmm.
Thank you. The next question is from the line of Pritesh Chheda from Lucky Investments. Please go ahead.
Yeah, hello, sir. Just a clarification. So your gross block in pharma, after the current capacity expansion that you called out of about 150 crore, will be 375 crore, right? That's the number you mentioned?
somewhere between 360 and 375. So current. I mean, he says after the investment. After. Yeah.
No, sir, you're not clear, your number, what you said.
I said, yeah, it will be somewhere between 360 and 375.
Okay.
You're right.
Okay.
After
Okay.
the investment that we invest.
After the investment, which is basically 80 to 90 million pens.
No, the investment is in the current year. We're looking at adding 40 to 50 million capacity over the next 2 years. So there will be some additional investment needed for the rest of the capacity.
So I am asking about the eventual number. So post this expansion, you will have a gross block of 375 crore, which means about 90 million pen capacity. Is this two numbers correct, or there is any change here?
There are some small things. So, we're still looking at our entire lab and other supporting services set up, for which we don't know what the investment number is going to be today. But essentially, like I said, consider a 15 to 20% margin just for.
Okay, no problem.
Yeah,
no problem.
So nothing.
What should be?
I don't think there will be anything significant.
Okay. What should be the asset turn of this 375 crore block?
Anywhere between 1.5 to 2.
Okay. And the other question is, if you could tell us in the healthcare 165 crores, what is the corresponding approximate pen volume?
I think somewhere around 17,
Okay.
17 million British.
Okay, no problem. And my last question is, on the non-healthcare side, so basically consumer and industrial, over the next 2 years, based on the contracts that we have in hand, newer businesses that we have in hand, what should be the growth in combined these two businesses over the next couple of years? Should we continue to grow at the CAGR we have, or there will be some acceleration?
Pritesh, again, difficult to put in a number in, but as we mentioned to a query raised by the other participants also, we expect growth across all the three segments.
Okay. Just 375 crores gross block you said? Just a minute. So you said 2.5x asset turn, right? Or 1.5x you said?
Somewhere between 1.5 to 2, Pritesh.
Okay. Done. Thank you very much. All the best.
Thank you.
Thank you. The next question is from the line of Ankit Gupta from Bamboo Capital. Please go ahead.
Yeah, thanks for the opportunity and congratulations for a good set of numbers. Sir, in this, the target for 35 million pens for FY26, can you give a broad breakup of, how much will be our own IP-led GLP pens, our own IP-led insulin, and customer-led IP? So any broad breakup if you can give for these three segments?
Okay, we already gave this on a previous question on this call. We think about 70% is going to be IP-led.
And that will be largely on the GLP side?
Combination of GLP and insulin, yes.
Okay. And so on our own IP-led GLP pens, can we assume that majority of the launches which will happen, in the markets like Canada and Mexico will be pen injectors and not the auto injectors?
Sorry. Canada and Brazil will basically be pen injectors and not auto injectors. Yeah, that's right.
Okay. And, across our various platforms in our own IP, will it be possible for you to share the average realizations, even if you can give a broad range?
No, because that's difficult. It is important. We will not be able to share that on this.
Sure. And,
Sorry to interrupt, sir, but I may request you to rejoin the question queue for follow-up questions. Thank you. The next question is from the line of Davani Desai from Turtle Capital. Please go ahead.
Hi, good morning, everyone. So my first question is, the new product development side, we mentioned 2 products. So the question here is that do we develop these products suo moto from our side based on our understanding, or is it based on some feedback from the customer innovators? How does this work? And if you're developing on your own, what is the process to commercialization of such products? Doesn't it get longer in terms of approval, validation? If you can talk more on that.
Well, that's a fairly long topic. We do 2 things. I'll keep the answer short. When we develop devices for the generic market, we already know what we need to develop based on what is available from innovators in terms of feature functionality, user steps, etc. When we develop something novel, truly novel, that we intend to target the originators, then we develop it based on what is the user feedback, what are the clinical or human studies look like. So we look at usability, and we look at the complaints on the market regarding those products. So we combine a few of these, 3-4 of these things, and then come up with our own set of design inputs to develop a product. Now, so when you do something for an originator, we'll develop it fully. And then based on whoever jumps on that platform, there'll be another set of customization required. So it is a semi-platform strategy, but doesn't work the same way as a generic business does. So it works quite differently.
Got it. And second question is, so this incremental, 12 to 15 million, pens / auto injector that, we are targeting to sell in FY26. Is there any single customer concentration there where their success or failure, we are dependent on that? Anything like that? Is that a risk that exists?
So, I think customer concentration, that entire volume would be probably divided by 3 to 4 customers. I'd say equal risk. None of the 3 to 4 have approval right now, so I also don't know. We will answer this question, let's say, in 26.
Got it. Understood. Thank you and all the best.
Thank you. The next question is from the line of Ankit Gupta from Bamboo Capital. Please go ahead.
If you can throw some light on how are we seeing the opportunity in the Indian market as well. Canada and Brazil, we do understand there's a...
You repeat, your voice is very faint.
Yeah, so I was asking, if you can talk about how are you seeing the opportunity in the Indian market for the semaglutides?
It's all hard to tell. See, product is not sold in India. It's anybody's guess. It could be maybe as low as a couple of million to who knows. Who knows what the market actually comes in terms of size. But given the product is not sold in India, we only anticipate from what we hear from our customers.
Okay, so because one of Sure. Yeah, because on the Canada side, lot of some of the generic players who are in play for the market have indicated that the market opportunity itself will expand by 4-5 times post genericization of SEMA. So can we expect the same kind of trend to follow in Indian market, or it is too early to say? Like any views that you would like to share on?
Even the RLD doesn't sell the product in India. We don't know what the baseline market is.
Yeah. Sure. And sir, on the our own IP-led insulin pens, can you talk about, we had got a contract last year, and a lot of other competitors had vacated the market or were vacating the market. So how are we seeing the market for us on that side, and How do you see the scale-up happening there?
So I would probably say that pricing pressure on insulin type pen is very, very high, and we ourselves are looking at I wouldn't say getting out of insulin. We want to focus on insulin, but we want to keep that focus limited to maybe your large players in each of the markets. We don't want to do insulin kind of for everybody. So we are focused on the large insulin players in India. We remain focused in other regions of the world. We're still trying to grow the business. We don't want to grow the business in especially in regions where there is no regulation when it comes to devices, and the reason is because the Chinese can undercut you by a very significant number. So, and we're looking at other therapies, maybe not as price sensitive insulin, not as a large in volume as semaglutide, but somewhere in between where we can utilize our capacities for protein. And there are many that we are actively supplying into as well.
So how do you see the growth on our own IP-led insulin pens over the next 2 years?
I mean, we only have an insulin pen, right? One of our platforms is for insulin. Nothing else we supply goes into insulin. So we think our insulin growth over the next 2 years will, I wouldn't say that it will be 70-80%, but I think, consider an average of maybe 20, 25, 30% growth on the insulin side.
Sure. Okay. Thank you, Vishal.
Thank you. The next question is from the line of Anant Jain and HNI. Please go ahead.
Thanks for the opportunity. One question here, Amit, is, when you think of pens, auto-injectors, there are like multiple processes in terms of fill finish, the device itself, the API, packaging, all of these things. So do you think that we would be willing to, or we are looking to expand in any adjacency areas to give a one-stop, one solution to our customers? Do you think that could be a possibility, not in the next 6 months or a year, but going down the line?
I'm glad someone asked this question. I've spent the better part of last 12 to 18 months coming up with a strategy on how to vertically integrate. What are the other areas we can go after? Again, this is one of those questions we could have a very long conversation on, but to keep it short, just in 2 years, you've seen potentially, somewhere close to a 200 million capacity created in India in the CDMO space. There's probably another 2 to 300 million capacity created outside. I frankly, if you ask me, plus all the large pharma players, generics and non-generics, are creating their own capacity.